In this video, I will show you 10 of the simplest and most effective methods for keeping a budget. Budgeting is the first and most important step towards saving money and building wealth. Sometimes the hardest thing about saving money is just getting started. This step-by-step guide can help you develop a simple and realistic strategy so that you can save for all your short and long-term goals. Before the video begins, please give it a like, and if you want to see more, please subscribe to the channel. Now, let's begin. 10. Focus on small changes in various budget categories. Being on a tight budget means every spending decision adds up, but you can start saving money by making small changes. For example, the money saved by making lunch instead of buying carry-out or eating out can easily add up. The same is true with brewing your own coffee rather than stopping for a cup at Starbucks. Some other changes include turning lights off when you're not using them, cutting the cord on cable, and opting for cheaper streaming services. Streaming services often have shared or family plans that you can split between multiple people to lower the cost even more. Withholding from impulse purchases. One way to help do this is by writing down wants and waiting a week before buying them so you can see if you still want them. 9. Use a budgeting app. A budgeting app can help you manage your budget and maximize your savings. For example, Digit automatically examines your accounts and moves money for you to help boost your savings. Also consider Chime, a banking app that makes it easy to save your spare change. Budgeting apps generally work by tracking your spending and may even predict future spending, saving you time on estimating budget line items. Then you can keep tabs on how much you're spending in each category monthly and look for where you can cut down. 8. Savings goals. One of the best ways to save money is by visualizing what you are saving for. If you need motivation, set saving targets along with a timeline to make it easier to save. Want to buy a house in 3 years with a 20% down payment? Now you have a target and know what you will need to save each month to achieve your goal. 7. Refinance your mortgage. Refinancing is an opportunity for some people on a tight budget to save money. If you can reduce your mortgage interest rate by 0.5% or more, it might be worth considering doing so now. Refinancing a mortgage could save thousands of dollars over the life of the loan. For example, a homeowner with 25 years left on a 30-year, $275,000 mortgage has current balance $250,230.95, original interest rate 6.5%, current monthly payment $2,089 in principal and interest each month. Over the course of the loan, the homeowner will pay a total of $344,370 in interest. Now, let's say that this homeowner could refinance to a 25-year mortgage with a 5.25% rate. Refinancing would lower the principal and interest payment to $1,499.50 a month, saving $589.50 each month. The total interest paid, assuming the mortgage is kept for another 25 years and including interest paid on the original loan for 5 years, equals $199,620.03, a savings of $144,749.97. Closing costs, which average about 3% of the refinance amount, are an important consideration when refinancing a mortgage and weren't included in these calculations. 6. Eliminate your debt. If you're trying to save money through budgeting, but still carrying a large debt burden, start with the debt. Not convinced? Add up how much you spend servicing your debt each month, and you'll quickly see. Once you're free from paying interest on your debt, that money can easily be put into savings. A personal line of credit is just one option for consolidating debt so you can better pay it off. 5. Get a bank bonus. Some banks offer a bonus for opening a new account and meeting a few basic requirements, like setting up direct deposit or maintaining a minimum balance. Some of the best bank bonus offers let you earn about $250 or more within a span of just a few months. Read the fine print before signing up for a bonus so you'll know how to earn the bonus and how long you need to keep your account open. Also, watch out for minimum balance requirements that might make it difficult to open or maintain your account, as well as account fees that could eat away at your bonus amount. 4. Find cheaper ways to travel. More people are traveling now than at the height of the COVID-19 pandemic. If you're making travel plans, whether to visit a relative or to take a much-needed vacation, make sure to establish a budget for the trip ahead of time to avoid splurging. When it comes to the flight, you may be able to save money by booking a red-eye flight or flying with a budget airline. You can also save by staying at a budget-oriented hotel or Airbnb, picking up some groceries instead of eating out every meal, and using a credit card that doesn't charge foreign transaction fees. 3. Cancel automatic subscriptions and memberships. Chances are you're paying for multiple subscriptions, like Netflix, Hulu, Spotify, gym memberships, trendy subscription boxes, and Amazon Prime. It's time to cancel any subscriptions you don't use on the regular, and make sure that you turn off auto-renew when you make a purchase. If you cancel it and decide you can't go without it, subscribe again, but only if it fits into your new and improved budget. And for those subscriptions you do want to keep around, think about sharing memberships with some family or friends. A lot of streaming services like Netflix and Hulu let you watch your favorite shows from 2 or more screens with an upgraded account. That way, everyone wins and saves. 2. Spend extra or unexpected income wisely. When you get a nice work bonus, way to go, inheritance or tax refund or random stimulus, put it to good use. And when we say good use, we aren't talking about adding that fancy new stamp to your stamp collection or even just putting it in the bank to camp out. If you've still got debt in your life, you'll be better off using those funds to pay off your student loans or the balance on your credit card instead of stashing that money away. If you're debt-free, use those extra dollars to build up your emergency fund, for emergencies. Bonus tip: if you get a large tax refund every year, it's time to adjust the withholding on your paycheck so you can bring home even more money each month. Plus, you don't want to give the government any more of your money than you have to, right? 1. Cut down on your grocery budget. Most people, after they do a budget, are shocked to find out how much they're actually spending at the grocery store each month. And if you're the average American family of 4, with 2 kids 5 and under, you're probably spending around $928.01 a year. Yikes! It's so easy to walk through those aisles grabbing a bag of Oreos here and a few bags of chips there, and then top it off with the fun goodies at the register. But those little purchases, aka budget busters, add up quite a bit and end up blowing the budget every single month. Save money on groceries by planning out your meals each week and taking a good look at what you already have in your pantry before you head to the store. Because why would you want to buy more of what you already have? And if you really want to stick to your list, leave the kids at home. Want to save money and time? Try online grocery pickup or delivery. Most major grocery stores offer it these days, sometimes even for free, and it can save a ton of money. Picking up your groceries gets rid of the temptation you would have had when you caught a whiff of those freshly baked chocolate chip cookies floating through the aisles. In other words, you're forced to stick with your list and avoid those impulse splurges. Thank you for watching, and please hit the like button, subscribe to the channel, and enable post alerts to view more of our future videos. After saying that, keep watching our videos, and I'll speak with you in the next one.